The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Welcome, everyone. Happy Friday. Welcome to another edition of Breakout Investing on TFNN, TGIF. Hope y'all have big weekend plans. Wish we could be ending the week on a brighter note when it comes to the stock market. If you're short the market, you're happy. But if you're a market bull, certainly the selling pressure today a bit unnerving, no doubt about it. 877-927-6648. If you want to give me a call, that's the number to use. 877-927-6648. My show airs daily on TFNN now from 3 to 4 Eastern, 1 hour show. You can get it as a podcast on iTunes if you can't listen live. And don't forget, you can listen to all TFNN programming 24/7 on your smartphone. If you're out and about, just plug those earbuds in. Open up your smartphone browser, type in TFNN.mobi. You can get the stream that way as well. And don't forget about Tiger TV on the homepage of TFNN.com. The show is carried live on Channel 1, and it is archived on Channel 13 using Tiger TV. Of course, you can listen to the show, but you can also get a nice picture, look at charts live right along with me on the show. Folks, don't forget about the Great Panther Silver giveaway. Great Panther Silver and TFNN are going to be giving away 27 pieces of silver between October 29th and 31st. It'll be happening 1 hour, 9 a.m. to 6 p.m. Each hour. We will give away one piece of silver to a lucky listener. All you have to do is register on the homepage of TFNN.com on October 29th and 30th. You get a half-ounce piece of silver, and on Halloween Day, October 31st, a full 1 ounce silver piece, again, from 9 a.m. to 6 p.m. Eastern, and that is when the programming is carried live. So be sure to check out the Great Panther Silver Halloween giveaway right on the homepage of TFNN.com. We had some distribution in the NASDAQ yesterday. The market's in a downtrend. We know that. Distribution in the major averages has been nothing new. It basically started in late September, has been making its presence felt for quite some time. We've got more of it today as NASDAQ volume is tracking about 7% higher than what we saw yesterday. Very heavy volume on the NASDAQ yesterday, above average at 1.9 billion shares. Looks like we could hit at least 2 billion on the NASDAQ today. Very, very heavy volume on the New York Stock Exchange as well. We had 708 million on the New York Stock Exchange yesterday. We're tracking about 30% higher than that today. So we'll be up around 900 million, maybe a little bit more than that. So more distribution going on in the major averages. This is clearly a market where the risk outweighs the reward. You want to be careful about, buying stocks on sale here. Stocks that are getting hit pretty hard by institutional selling can continue lower for an extended period of time. Sometimes the selling is short-lived, other times it's not. But you don't want to be playing with fire in a market environment like this where institutions are clearly selling stock at this point. Let's take a look at the Dow Jones Industrial Average. The Dow, the S&P 500, the New York Stock Exchange Composite Index, they had all been holding above their 50-day simple moving averages. Not the case today. The Dow, big price spread today. It is down 1.7%, 227-point decline to 13,322. It is now slightly below its 50-day moving average, an area where it found support last week. Same thing for the S&P 500. We'll check on the benchmark index here. We'll see that the S&P 500 is just a hair below its 50-day moving average. This doesn't really feel like a day where the dip buyers are going to come in late in the session. You just got a lot of heavy volume selling out there. Wouldn't be surprised to see a close near lows today. But S&P 500 right now down 1.8% to 1431. Its 50-day moving average is at 1433. So it's a couple points below that key support level. Just want to check in on the NYSE composite here. This may not be, the NYSE composite, probably the most broad-based stock index out there. It is still holding above its 50-day moving average. So that's cold comfort, I know, but let's look for a silver lining in this market today, and that would be that the NYSE composite has not technically broken down yet. It is down 1.5% today to 83.13. The NASDAQ and NASDAQ 100 really in rough shape here. NASDAQ composite now flirting with its 200-day moving average at 29.68. One would have to think that would be a long-term support level. A break below that level obviously would be bearish, but NASDAQ composite right now down 2.3% to 3,003, really close to that psychologically important 3,000 level. NASDAQ 100, our trip through the stock indices today. The NASDAQ 100 looks very similar to the composite, down 2.4% today to 2678. Its 200-day moving average is at 2785. So, an unsettled market. Absolutely. A market where it is very risky, no question about it. With my Ultimate Growth Stocks model portfolio, I am obviously proceeding cautiously here. I've sold a few names today and have very limited exposure in terms of the overall portfolio. Have been raising cash, kind of let the market tell me on a daily basis how aggressive to be here. Clearly, the yellow flags have been out there for a while. I was thinking, there was so much negativity about third quarter earnings season. I thought it might have been a little overdone. I mean, everybody you talk to, it's going to be awful. Tech earnings are going to be terrible. Materials earnings are going to be terrible. S&P 500 profits going to be the first decline year over year for several quarters in a row, and there was just so much negative energy and pessimism. But you know what? The concerns have turned out to be warranted, and in fact, the earnings are pretty bad. I mean, let's call a spade here. So market is probably just pricing that in right now. And, you'd like to think that earnings reports next week are maybe going to be better than what we saw this week. But when you listen to what IBM had to say and the dismal results from Google yesterday, and the bad earnings reports are just piling up here, and that is why you're seeing sellers coming out from the woodwork. One thing I didn't mention about the NASDAQ composite, let's go back and take a look at the NASDAQ composite here. Going into today, we were 4 days into a rally attempt. So today would have been day 5 of a rally attempt. But you see that the NASDAQ's low here on October 15th was undercut unequivocally today. So it was a brief rally attempt that has officially ended. Any up day from here is going to be the first day of a rally attempt. Then what you do is you wait for day 2, day 3, and then day 4 or later you want to see a big percentage gain in higher volume. That's your so-called IBD follow-through day that have done a good job in the past of marking market bottoms. They don't work all the time. They're not foolproof, but you always want to recognize when one happens. So the brief rally attempt that we saw in the S&P 500 and the NASDAQ, it is over and done with at this point. So if we open higher Monday, that's day 1 of a rally attempt. Tuesday would be day 2, Wednesday day 3, and so on. So once you get day 1 of a rally attempt, you want to look on day 4 or later for a big percentage gain in higher volume. That's some follow through and a sign that the market trend may be ready to turn upward again. So NASDAQ today undercuts its October 15th low from Monday. The S&P 500, what's interesting here is that the S&P 500 has not technically undercut the low that it put in last Friday, October 12th. You can see it is still holding up here. The low for the S&P 500 we're looking at is 1425. So today the low for the S&P 500 was 1429, 1430 in that area. So it's still barely holding above that low, which means its rally is technically still intact. Day 5 of a rally attempt. Again, if that October 12th low gets undercut, we'd be looking for day 1 of a rally attempt for the S&P 500 as well. Taking a look at crude oil today, ended at $90.05 a barrel, down $2.05. Gold for December delivery fell $20.70, 1.2% decline for gold. It settled at $17.24, down about 2% for the week. Taking a look at the GLD, it is under selling pressure. Look at the GLD here, sitting just above its 50-day moving average here. 50-day line for the GLD is 166.58, and GLD is at 166.87. So what's that, about 29 cents above the 50-day moving average. Is the GLD going to break support here with conviction or not? Checking in on the U.S. dollar index, not surprised to see a strong dollar here today. The greenback recently trading at 79.62, 79.62, up 25 ticks. I'm going to stick to my guns here and say that it's still not clear to me that the greenback here is ready to start a new uptrend. It is in rally mode today, but closed Thursday at 79.37, and it's at 79.62 right now, with formidable resistance at that 80.50 area. So it's gonna take a lot for the U.S. dollar to be able to bust through that resistance level at 80.50. It may do it, but it's no sure thing. That's for sure. Yield on the 10-year note trading lower today at 1.77%. The 30-year bond 2.94%, also lower. Economic data earlier today doesn't really not really moving the market, but we did have existing home sales down 1.7% from August to 4.75 million units. Economists were expecting a smaller decline to 4.7 million units. The housing data haven't been all bad, though. Earlier this week, we had housing start and building permit data that smashed estimates. And it really is interesting, while we're on the home building topic, to see the home builders holding up here. At least they were last time I checked. Let's check in on the ITB. And yeah, look at this. Isn't that amazing? The iShares Dow Jones U.S. Home Construction Index Fund up a penny on the day to 2089, not giving up any ground at all. So bullish performance for the ITB. And check out some stocks inside that fund, see what selling pressure looks like in the group. Pulte Group, a strong performer, up 25 cents today to 17.90. We've also got Ryland Group, RYL, trading up 14 cents to 32.71. So once again, yet another impressive performance by the home builders today on a decidedly down day for the market. Breakout Investing on TFNN, folks. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. 877-927-6648. That's the number to use if you want to give me a call. The folks over at Investors Business Daily put out their 2012 presidential election daily tracking poll. It's been going on every day at investors.com. The latest results showed that President Obama widened his lead over Romney. Among likely voters, Obama is currently at 46.5%, with Romney at 44.8%. Had a bunch of earnings reports to go over. Before we do that, let's check in on some big downside movers today. Apple continues to really take it on the chin here. I know Tom loves when I say that. Take it on the chin. Apple down 2.9% to $614.03 a share. Clearly, there is some apprehension about what this company is going to say when they report earnings next week on October 25th. Right now, the consensus estimate stands at $8.85. That would be up 26% from a year ago. Revenue $36.2 billion. That would be up 28% from a year ago. But what you have going on with Apple right now is institutional selling. Nothing more, nothing less. Is there a chance that they'll come out with a good, solid quarter next week? I suppose. But that does not take away from the fact that big investors have been getting out of this stock since last month. And that is a reason why, again, I took profits for the Ultimate Growth Stocks model portfolio, saw early signs of institutional selling. No need to get back into this stock ahead of earnings. Right now, key support for Apple would be down at its 200-day moving average, all the way down about $581 a share. May not get down that far. If we do see good earnings from Apple next week, it may be enough to fuel some much-needed positive sentiment in this market, but Apple under a lot of pressure today, down 2.9% to 614.03. Remember, Google took a big hit yesterday. They accidentally released their earnings report in the middle of the trading day when it was supposed to come out after the close. The results were just awful. I mean, they were just very, very bad results at Google. Stock is down another 2.2% today, $15.09 decline to $679.91. The fact that it is below its 50-day moving average now certainly brings the possibility of further weakness down to its 200-day moving average at 632.50 into play. So tough days for Apple and Google today. Let's talk about a bright spot in the market. How about that? Look for a bright spot in the market, you have to look at a $450 million market cap company, but so be it. Magic Jack Vocal Tech, ticker CALL. Company had pretty good earnings. This is a company that makes devices. You've probably seen their commercials on TV. They make devices that route low-cost phone calls over the internet. They made 78 cents a share in the quarter versus a loss of 4 cents a year ago. Sales growth accelerated nicely, up 64% to $40.8 million. In September, the company forecast full-year earnings in a range of $1.70 to $2 a share. Today, CEO Dan Borislow said the company has a good chance to report earnings above $2 a share this year. So, call is benefiting. Stock is up 12.7% today to 23.05. We'll see if its 50-day moving average at 23.81 proves to be a resistance level. You know, I talk about that a lot, but when a top-performing stock undercuts the 50-day and tries to rally back above it, sometimes it can be a ceiling and a resistance level. So, nonetheless, outstanding earnings from Magic Jack today. Another good earnings report we can talk about is Riverbed Technology. Now, this is a company used to be mostly known for its wide area network equipment, but it has kind of recognized changing conditions in the group, and they've branched out into cloud computing, network performance management, things like that. Good earnings from Riverbed. Stock is up 12.2% to 23.22, and it was definitely under selling pressure ahead of the results, you can see. But earnings at Riverbed up 17% to 28 cents a share, sales up 15% to $218.6 million. Outside of that, a lot of damage in the market today. When we come back, we'll talk about Chipotle. The story's not getting any better there. It's weighing on the restaurant group in general today. Also have results from Microsoft to talk about. Whole bunch more coming up. Stick with me, folks. We'll be back in about 4 minutes. You're listening to Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN TGIF. Hope you all have great weekend plans. Checking in on the markets here. Dow still down a little over 200 points, 1.5%, 13,347. Tech stocks lagging again. Nasdaq down 2.1%, holding above that 3,000 level though. Currently at 3,007, and the S&P 500 down 24 points, 1.6% to 1433. Talked about good earnings from Magic Jack and Riverbed. Some other stocks not having such good days here. Athena Health, ATH, and this is a company, boy, they continue to deliver good top-line growth. They're selling a lot of product, but obviously concerns about growth going forward here. The company provides billing, collections, medical record management software to physician practices. Earnings were up 25% from a year ago to 30 cents a share. That was 4 cents above estimates. Sales up 26% to $105.9 million. 26% year-over-year growth is solid, but it was below the consensus estimate of just over $109 million. Stock is down 7.9% today to $73.78 after hitting an intraday low of $70 a share. So it is trading up near its session high. That's the good thing, but still Athena Health having a rough day. Chipotle Mexican Grill. Let's check in on Chipotle. Stock is at $243.39. Got to give credit to my friend, buddy, pal Bob Lang over at explosiveoptions.net. Not sure exactly what kind of option strategy he played with Chipotle, but he said he needed a big move either way, up or down, and I know that he is making a nice profit in this trade today because shares of Chipotle down almost 15% on the day to $243.39. Big gap down, trading near its session low. On the surface, the number's not too bad at Chipotle. Earnings up 19% from a year ago to $2.27 a share. 3 cents below the consensus estimate. Sales were up 18% to $700.5 million. That was also slightly below estimates. Chipotle said what a restaurant stock, what investors don't want to hear from restaurant stocks. They said that sales are going to be slowing in coming quarters, and they also cited the possibility of higher food prices. Now, in the restaurant space, not all companies are having the same problems as Chipotle. I believe that Panera, P-N-R-A, is still one of the better run restaurant names out there. They do not have the same problems, or they don't have the problems nearly as much that Chipotle is facing right now. But still, Panera taking a big hit today. Most restaurant stocks in this boat. Panera undercuts its 50-day moving average, trading at 161.97, down 4.5% on the day. Next week, we have earnings from Buffalo Wild Wings. We'll see what B Wild is doing today, looking to make it 3 in a row in terms of price declines. Shares of Buffalo Wild Wings down 2.7% to $83.78, still holding above support here. You can see it's 50-day, 200-day moving average right around the same price here, 81.61. So we should hear from Buffalo Wild Wings next week. Let me just double check that. Yeah, they're expected to earn 60 cents a share, down 2% from a year ago. Sales up 29% to $254 million. So that's Buffalo Wild Wings next week on Tuesday. But restaurant stocks having a tough go of it today. Back to the tech space. Let's see, Microsoft. Shares of Microsoft having a tough day, down 3.2% to $28.55. Clearly a laggard stock here. Let's see, 1 week from today, next Friday, Microsoft will launch its Windows 8 operating system for PCs, as well as its new Surface tablets. Is this going to be a growth driver for the company? Well, with the PC market the way it is, you have to wonder, how well this Windows 8 operating system is gonna do. Obviously, a lot of pessimism about there. People just aren't buying PCs these days, and Microsoft, its chart tells you that it's going to face challenging times ahead, and I don't disagree. I have no interest in owning Microsoft here. Earnings came in at 65 cents a share. It was nicely above estimates, but a 4% decline from a year ago. Sales were down 8% to $16 billion. That was below estimates of $16.4 billion. So Microsoft getting hit hard today as well. Yesterday we had very solid numbers from eBay. Let's check in and see what eBay stock made a nice move yesterday. Down a little bit today, down 1.6%, but holding up better than the Nasdaq, that's for sure. Recently trading around $50.03. So eBay, one of the few bright spots in the technology landscape in terms of third quarter earnings. In the oil and gas space, equipment maker Baker Hughes, that's BHI, they reported earnings before the open today. Stock, after 6 straight price gains, it is down sharply today, down 4.6% to $44.92. The company reported earnings of 70 cents a share. That was down 40% from a year ago. Sales up 3% to just over $5 billion. Staying in the energy space, Schlumberger, SLB, also working on a 4-session winning streak headed into today. It was doing well for a while, hits an intraday high of 75.70, but now it's trading near its session low, down 61 cents to 74.19. Schlumberger, decent top line and bottom line growth, earnings up 13% from a year ago, sales up 11% to $10.65 billion. Union Pacific, railroad operator, yesterday had nice earnings. The stock closed well off its high. It is lower again today, $1.80 to $123.54. Today, industry group peer Kansas City Southern reported earnings up 5% from a year ago to 82 cents a share. Sales up 6% to $577 million. After early strength, Kansas City Southern is trading near its session low, up 89 cents to 78.27, but well off its intraday high of 81.43. So, really not a whole lot of good going on out there right now. You could look at the home builders and say, God, these things are acting strong. There's no question about it. One name we've been talking about on the show, Fortune Brands spinoff last year, a company called Fortune Brands Home and Security. Sort of an ancillary housing play here. They have brands like Master Lock and Moen Faucets, but certainly a company that should benefit from a continued recovery in the housing market. You see a name like this today, down 3 cents to 29.24, has been a tremendous performer since, again, Fortune Brands spun it off almost exactly 1 year ago, but holding gains nicely. And again, the home builders just no sellers in that group whatsoever. But you may, again, my point is, stocks holding up well in a market like this. A weak market's eventually going to take everything down with it. It's pretty much taken everything down with it today, except the home builders. But it's definitely a time, to be raising cash, getting out of the market's way. I write the Ultimate Growth Stocks newsletter at TFNN. If you want to get a 30-day trial to Ultimate Growth Stocks, you can do that right on the home page. Click on newsletters and then investment newsletters. You'll also, in the breaking news section, it says try Ultimate Growth Stocks. You can get 30 days free. See how I approach this market. But I think one of the things I bring to the table as a newsletter writer is I really try to keep my subscribers in the market at the right time and get them out of the market at the right time. We are not hardly in the market at all here. This is, when the market is trending downward, most stocks are trending downward as well. Very difficult to make money in a downtrending market. So the good news is there's a lot of new bases being built, and that means that new leadership will eventually come into focus. And when it does, these are the types of stocks I will be focusing on for the Ultimate Growth Stocks newsletter, not only for the watch list that I put out on a weekly basis, but also for the model portfolio itself. So be sure to check out Ultimate Growth Stocks. I really try to keep people in the market at the right time, and preservation of capital is important. We have stops. Any stock I buy, I know where I'm going to sell it before I even buy it. Because I know that small losses can easily be overcome. It's the big losses that can really be, catastrophic to a portfolio. So, one of my jobs is to teach subscribers the importance of preservation of capital. If you're wrong on a stock, that's fine. Just admit you're wrong, cut it loose, move on. But I've found that over the past 15 years, if you focus on the right types of stocks and the right types of markets, you can materially outperform. And that's a matter of identifying fundamentally strong companies with a unique product or service that is driving growth, driving bottom line growth, driving top line growth, and buying them in the early stages of a move rather than the later stages of a move. And if you do that, you use fundamental and technical analysis, and you're buying during market uptrends, I think you'll be just fine. But you have to know when to take profits as well, and you also have to know when to take your medicine. If you do that, you're always going to have capital to work with. And frankly, a lot of investors out there don't have the capital they once had because of not cutting losses and not being disciplined and these types of things. So, all right. So Fortune Brands, Home and Security still holding up pretty well here. Also on the earnings front, I wanted to take a look at Honeywell. So much for these large. Honeywell's actually doing pretty well here, breaking out over a swing point of 62. Volatile day of trading for Honeywell. Hit an intraday low of 60.80. Now trading at 62.58, up 1.9%. Last I checked, this one was lower, but earnings were up 10% from a year ago to $1.20 a share. Sales were flat at $9.3 billion, but the stock outperforming nicely today. And GE as well. I believe this one was under quite a bit of pressure here. Gap down for GE today, down 3.4% to 22.02, sitting right above its 50-day moving average here. So you can see this is that 50-day line has sort of been a trampoline for the stock since July. Found support in July, found support in early September, and it could try to find support here. So aggressive investors with a tight stop may try nibbling at GE right around here at 22.02 as it flirts with its 50-day moving average at 21.74, but holding above that support level for now, so a stock that has not broken down yet. And finally, among blue chip names here, McDonald's, MCD. Boy, just ugly day for McDonald's, another restaurant name. Restaurant group is weak today, but McDonald's reported earnings. Same-store sales were up 1.9% in the quarter, but it was the first time that same-store sales rose less than 2% since the second quarter of 2003. Earnings missed estimates by 4 cents, came in at $1.43 a share. Sales were flat at $7.2 billion. McDonald's, a broken stock here, down 4.4% to 88.75. Ethan Allen Interiors, again, another one of these ancillary housing plays. Big gap up for the stock yesterday on strong earnings. It's extending gains today, up another 5% to 29.46. Ethan Allen, big furniture brand. They operate many furniture stores out there. 19% move for the stock yesterday, extending gains today. So this housing story, I'll tell you, is an impressive one. Checking in on shares of Workday. Workday, remember, came public about a week ago, up $1.42 today, 2.7%. It's been trading for 6 days now, 5 up days and just 1 down day. Recently trading at 54.84. UBS started the company at neutral today, describing the company as the PeopleSoft reincarnated in the cloud. The CEO or co-CEO at Workday is the guy who founded PeopleSoft. So UBS described the company as PeopleSoft reincarnated in the cloud. Workday provides web-based human resource management software. Very strong debut for Workday, and it continues to look pretty good here in a down market. Talked about Google and Apple, rough days for these tech bellwethers. Lululemon also having a tough day. They don't come out with earnings for a little while. They're keep a slightly different fiscal year. I think Lulu's earnings are due later in November, but stock is down 6.9% today to 69.50. Don't know if there was news on the stock, but these high multiple names in a market under distribution have to be very, very careful with them. You can't stay married to a company saying, hey, I love the fundamentals, I love the company's product, it'll come back, and then what you do is you get into this position where you're hoping it comes back, and it keeps going down. You keep hoping, and then you got big problems. So Lulu, in my opinion, flashing a sell signal today, even though it's still holding above its 200-day moving average here. Big sellers in the stock today, down 7% to 69.50. So growth names overall looking very, very vulnerable here. I'm going to wait for the selling to run its course before I think about buying anything. That may take a little while, but I'm willing to do it. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
close here. Let's check in on the markets before we head over to Lee in Tampa, who's been patiently hanging on. Right now, the Dow down 184 points, 1.4% to 13,365. So, at least we are not accelerating lower into the close here. That's a good thing. S&P 500 down 1.5% to 1435, and the Nasdaq down 63.5 points to 3,009. So we're going to go to Lee in Tampa. Wants to talk Visa. Lee, how you doing today?
Hey, Ken.
What's happening?
How are you?
I'm hanging in there, getting ready for a good weekend.
Good. Hey, I actually didn't want to talk about Visa. I wanted to ask you what your thoughts are on either Verizon or AT&T and a retirement account at their current levels.
Verizon or AT&T. Okay, so we got. The thing, people love Visa for the dividend yield. It yields 4.6%. So that's a pretty nifty dividend yield for a company like this. It's actually been giving you pretty good relative price strength too. Anytime you can get good relative strength and a decent yield, that's not a bad deal. AT&T yields a little bit higher, 5%. I'm not a real expert in the telecom, so I can't tell you like the fundamental difference between both companies. I'd have to do a little work there to figure out which one would be better at this point. I can tell you right now, Verizon is more in favor, I would say, than AT&T at this point, just in terms of recent accumulation in the stock.
Great. So would you be amenable to adding that in a retirement account at this price, or wait a bit?
Yeah, the market looks vulnerable here. I still think that there's a chance that the selling, may be short-lived and that we could rally here into the end of the year, but things look vulnerable right now. Verizon is holding, let's see, it recently bounced off its 50-day moving average. Its 200-day line is around 42. If it were me, I would wait and see where this market's going. And, This is where I'm going to just kind of wait and look for some follow-through. If we get some follow-through, a big percentage gain and higher volume, then you can nibble and maybe put some money to work. But at this point, Verizon probably looks a little better than AT&T at this point, but that's just looking, last 5 minutes at both stocks.
Okay, well, thank you very much. Love your show. Never called, and I really appreciate you.
All right, Lee. Appreciate it. Have a great weekend. Thanks so much.
Thank you.
All right, Lee from Tampa. Verizon or AT&T, two high-yielding stocks. No question about it. All right, well, we don't have much time left here. Let's talk about some economic data to watch next week. Really kind of a light week. Believe it or not, we've got another two-day Fed meeting, Tuesday and Wednesday, so we'll get another decision on interest rates. I believe there's going to be a press conference on Wednesday. Also on Wednesday, we're going to get new home sales data for September. We'll see if the home builders can continue to rally. Thursday, weekly jobless claims. We had a big unexpected jump, or a larger than expected jump yesterday. And Friday, the first reading on third quarter gross domestic product. That's going to be interesting. In the, the second quarter, the economy grew at 1.3%. First quarter, it's around 2% growth. And in the fourth quarter of last year, hard to believe, the economy grew at a rate of 4.1%. So lots of earnings reports next week as well. On Monday, Caterpillar, Freeport-McMoRan, Peabody Energy, and Yahoo. See what Marissa Mayer has to say about growth plans going forward. Coming up next, the Tom O'Brien Show, 4 to 6 Eastern. Have a great weekend, everyone. I'll see you back here on Monday, 3 o'clock Eastern, for another edition of Breakout Investing.